US has always been seen as a safe haven, not just because of its capability to make its payments, but it's also because it is rules-based, it is a fair system, and it has its independent institutions. But now, these are the kind of questions that are really questioning whether that system is still rules-based, is it still going to retain its independent institutions or not? And that is a huge shift. Of course, economic cycles is something that you can come out from, but this is a huge structural shift, and this does mean that this could have very lasting impacts. And that, of course, is reflecting across the currency spaces. We are seeing safe havens bid quite strongly, Swiss franc and the Japanese yen, for instance. But along with that, we've seen a huge momentum upwards in the euro, for example. Particularly for Europe, we've seen a huge momentum there because of the shift that they've seen in the fiscal policy, particularly in Germany. And that has been a very key upside catalyst for European markets, equity markets, and has supported euro as well. And again, of course, the decline in the dollar has euro reacting quite positively as well. And what we need to really watch from here is whether or not we get that US recession. I mean, it's been something that was expected last year as well, but didn't quite happen. Think that, the recession is going to be globally widespread. Then it kind of remains a little bit difficult for these cyclical currencies to continue to enjoy that weakness of the US dollar. I think in the near future, it is likely going to be a lot of volatility. It is really hard to say where we end up because in the first place, we do not know what is the objective for these tariff policies. So I do think that the US dollar is likely to face more depreciation from here as we continue to understand what these policy shifts mean. At the same time, the Chinese yuan is going to be, I think a lot of people would probably expect a devaluation of the yuan. I don't see it heading there because it kind of brings financial stability risk. It brings risks of capital outflows for China, and they don't want to add to their troubles at this point. But a mild weakness is something that is likely to continue. It is hard for them to do it when the US dollar is weakening at this pace, but I think they would maintain a mild weakening bias for the yuan. I think from here on, the question again really becomes one of whether or not we do get that recession, because that can really kind of create a disturbance for this upside path in the euro, because traditionally euro is not really a safe haven currency. It is only benefiting because of the decline in the US dollar. And the other thing that I'm really interested to see is how this money moving out of the US, where does it really go? Does it go into the European markets? Does it go into the Japanese markets? Does it go into the Chinese markets? I think if the European nations kind of continue to deliver on those fiscal stimulus promises that they have made, a lot of momentum can be seen towards the European markets, and that potentially is obviously quite a big upside catalyst for euro as well. Gold, of course, that is really the talk of every town, every meeting, every dinner table right now. That is being obviously led by a variety of supportive factors, but this weakness in the US dollar is also aiding the gains in the gold market right now. Actually, we've seen for the last 3 years that central banks across the world, I think in many economies, have been buying gold. Currency not linked to any economy. It is as neutral as you can get when it comes to these geopolitical disturbances. And the good thing is that, so far it was the central banks buying. The ETFs were not buying gold because they were so distracted by equities. But over the last 12 weeks, with all this tariff disturbance also, we've seen a lot of ETFs also starting to buy in gold. So that is just the start of the trend. So I think this rally in gold really questions we need a new terminology to that 60-40 portfolio. That certainly seems very outdated. You need a permanent place for gold in your portfolio. We were actually expecting gold to reach $3,300 US by the end of the year, but that target certainly seems to have already been taken out. And now we are looking at gold to reach about $4,000 US by the end of the year.